Congratulations on taking the first step in improving your financial and therefore personal well-being. This is the first video in a series of 3 that will introduce you to our way of thinking and show you how we've helped others achieve financial success. When I was a youngster, I focused on dollar debt. Mortgage payments, strata fees, water rates, shire rates, power bills. Then there was my car. Fuel costs, insurance, maintenance. Next thing we had children and one income. Feeding and clothing a growing family, sending them to school. The bills just never seemed to stop. My solution was to work longer hours. The saying work smarter, not harder was not one I'd heard before. I now know that this wasn't the smartest move. I observed the multitude of people who retired from the workforce and who had very little to show for it. Sure, they'd paid off the mortgage, which was just as well because they'd struggled with everyday expenses. I'm sure you've even heard people say it. Asset rich, cash poor. This is what I call my life chart. We're going to follow a young couple from their first property purchase at age 25 through to retirement. They saved hard and scraped together a 10% deposit, went to the bank and borrowed the rest. At this stage, their loan is 90% of their property's value. I call this percentage debt. Over time, due to increased property values and loan repayments, their loan now represents a smaller percentage of their property's value. Assuming property values double every 10 years, their percentage debt at age 35 will be approximately 40%. Another 10 years has slipped by. Their percentage debt is now approximately 15%. At age 55, they make their last loan repayment and they're debt-free. Now they're debt-free, they're looking forward to treating themselves. In what seemed a very short 10 years, they are 65 and looking forward to retirement. They soon realise, however, their holiday pay, long service leave, and superannuation payment simply won't give them the lifestyle they've become accustomed to over the previous 10 years. Another 5 years slip by and it becomes apparent they're going to live longer than their money. They visit a friendly mortgage broker who arranges a reverse mortgage. They borrow 25% of their property's value. When I saw the statistics showing how many retirees were taking out reverse mortgages, I thought there must be a better way. In a nutshell, we start our life with a mortgage, strive to pay it off, make sacrifices along the way. Then when we retire, we take out another loan to see us through that retirement. Debt is like fire. Too close and you'll get burnt. At a comfortable distance, it can be quite warming. My next video will look at what could have been had they followed a different path.